As you just saw, bank stocks are moving higher after Germany and France pledged to recapitalize the Eurozone's banks. Jeff Harte is a financial analyst at Sandler O'Neill, and he joins us now from Chicago. Jeff, welcome to Bottom Line. Thanks for coming on today.
Nice to be here. Thank you.
Jeff, the pledge by German Chancellor Angela Merkel and the French President Nicolas Sarkozy to form what they call a comprehensive response to the Eurozone debt crisis by the end of the month. Will that plan provide the capitalization that's needed to make sure banks don't go under?
Tough to say. I mean, at this point, they're talking the talk, which is good news because they really haven't talked the talk till now. The real question will be, will they walk the walk? What are the details of the plan? But I think in the end, the Eurozone economies have the wealth and have the capital to get through this. It's a matter of, I think, kind of the policymakers getting together and kind of doing what needs to be done, similar to TARP that we had over here. So they're moving in the right direction. The fear is, you know, how quickly will they actually start walking that walk, and how patient will the markets be?
Well, Jeff, will today's announcement give European banks the confidence they need to lend to each other? We did hear today the European Central Bank said that overnight on Friday, banks deposited $347 billion with the ECB. Is that an indication that the banks would rather hold on to the cash than lend it out to each other?
Well, that's the thing. You know, when you look at the financial industry, kind of banks in general, you're generally levered at least 10 to 1. And when you're levered 10 to 1 or better, it's all about confidence. And when the market becomes really unsecure about not only specific borrower confidence or counterparties, but the overall system, yeah, I mean, banks become afraid to lend. Credit, the flows really shut down. I think that's kind of what we're seeing now. Fortunately, kind of the government tools are there to kind of keep from a liquidity crisis, which I think is really an important key, that we're probably not going to have a 2008 type liquidity crisis. But in order to, I think, really get the interbank lending to pick up again, we're going to have to see the details of this plan they're putting together and actually get some indication that it's going to pass and actually work. So we're moving in the right direction, but it's kind of early to get too excited.
We also received word today that part of Dexia is going to be nationalized. That's the troubled Franco-Belgian bank. Dexia owns large amounts of government bonds of indebted countries like Greece and Italy. Is this move going to be enough to insulate Belgium's retail banks from the risks of the wider group Dexia SA?
I would think so. As long as kind of the government bodies over there really stand behind the banks, recapitalize, and kind of draw a line in the sand, I think it works out fine. Though it is interesting, I believe Dexia passed the stress test not too long ago. So that's part of what the markets are kind of wrestling with is, are they really going to take the hard actions that need to be done? The economic ability there, it's whether the political will is there becomes the question.
And that's funny you mentioned that, because Dexia did pass the stress test. And the chairman noted that today. But if that is in fact the case, why did the bank have to be rescued?
Well, that's kind of the question. I don't think anyone has kind of looked at the stress tests we've had come out of Europe and say these have really been robust. They've kind of ignored some important things. I mean, at the end of the day, when it comes to banks and financials, what gets you into trouble is liquidity, not having enough cash. Not so much that you're technically insolvent, but not having the cash to pay your bills. That's something I think the governments over there can clearly avoid and make all this work out well. It's a matter, again, of just kind of stepping up and doing it. And I think they can, and I think they will. And ultimately, that becomes a catalyst for the market, because right now the stock market certainly, if not a lot of the credit markets, are not so sure of that and are actually pricing in that some worse things may happen as opposed to better.
Jeff, as we mentioned, bank stocks on the rise today following that a joint announcement by Angela Merkel and Nicolas Sarkozy. U.S. banks, they're going to begin reporting earnings this week. What are you expecting? Should investors be concerned about the bank's exposure to the Eurozone?
Should they be concerned? Yes. I mean, clearly, because I mean, if the Eurozone is the second largest economy in the world, if it goes the wrong way, that's bad news for all the other economies. But I think the level of expectation or fear put on some of the specific banks over here is really an overshoot. You look at a Morgan Stanley or a Citigroup, where I think they're perceived as being more exposed, but probably aren't. They're probably a little too beat up on that. But look, we're going to get tough earnings this week or next week from banks with capital markets operation, because investment banking and trading has been tough. But for the banking industry, we're still looking for year-over-year earnings growth in the aggregate. So things may not be quite as bad as they seem as you kind of look through the headlines right now.
Well, because of those tough earnings that we could be expecting, can we then expect the banks to release past reserves and count that toward current profits?
I don't think they can really avoid doing that. I mean, the amount of reserves the banks are holding relative to their loans and losses are, in some cases, still at record highs. And we're still seeing underlying improvements in the credit environment. Certainly on credit cards, delinquencies keep going the right way. Mortgages, they've stabled some. But I think unless we really see an economic downturn, banks are sitting on a lot higher reserves than they need. And you're going to keep seeing those released, for probably years to come.
Jeff, if I could ask you in about 15 seconds, should consumers expect new charges coming on their accounts going forward to make up for lost profits for the banks?
Yes. I mean, the net income on consumers may not be that bad, but you're going to see kind of fees shifting from one form to another. The banks have to be profitable, and they'll find a way to do that.
Jeff Harte, financial analyst, Sandler O'Neill joining us from Chicago. Jeff, it's always a pleasure to have you on. Thanks so much.